Let's talk about how investors should be deploying some of their capital right now. What changes do you think they should be making to their portfolio, especially ahead of the tariff deadlines that are approaching, amidst some of this geopolitical turmoil, and given so much uncertainty that still exists out there?
Well, so there's always a tremendous amount of uncertainty, Caroline. That's the whole wall of worry that we climb. But this could, you could geopolitical shock is hard to quantify. So if this continues or we get involved and it goes on for a long period of time, that's a different story. I'm going to say, for the point of our discussion, that let's assume that it's pretty short-lived, and then we get back to the business of tariffs and other worries. I'll just tell you what we have done. We were long and continue to be long the tech trade. I don't think if you're in a slowing economic environment, you want to go defensive. You want to own the reliable earnings growers. And so that's technology. It's selective consumer discretionary. And in our case, we're also overweight industrials. But what we began doing around the tariff tantrum was we started to inoculate our portfolio again by adding some names that are tariff proof. So by that, I mean, think of names like Sherwin Williams that make and sell paint locally, or TJ Maxx, which buys inventories that are already in the US from retailers, or Accenture, which had gotten clobbered on a slowing economic environment, but really is now a long cycle portion of companies' IT budgets. And then we added some, transmission companies, natural gas transmission, so EQT and Williams. And I think that's added to the fact that we're overweight the technology names. We also added a defensive name in technology, which is Cisco, in the last few months. And we added to names like Microsoft, Palantir, and CrowdStrike. So you really want to have a barbell approach in your portfolio. You don't want to give up on growth. You don't want to go all in on the defensive trade, because those stocks are actually trading. Consumer staples, for example, are trading at multiples that marvel and rival some of the technology companies with much slower top line and earnings growth.